show you that.
Hey everyone, my name's Andy from Finding Value Finance. Today we've got Uselink or Kasper Rasmussen with us. Thanks for coming on, Kasper. Really appreciate you coming onto the channel and sharing your insights and opinions. So,
yeah, my pleasure.
Recently you started a YouTube channel, correct?
Yes, I did.
What's the name of the YouTube channel?
It was something that I have wanted to do for. It's the same as my Twitter channel. It's called Uselink INV. Maybe I can quickly. Can I share the screen here somewhere? Oh, there it is. Yep. Can you see it now?
Nice.
Yes, here it is. So yeah, it's brand new, and basically I have had a thought about starting a YouTube channel for a while now, and then I think like 3 weeks ago I said, "Fuck it, let's do it." So I just started to record, and actually it's been growing on me. I mean, I find it really fun to do. I learn a lot myself, and the replies that I get right now from the comments is very positive. So I try to do a daily recap of gold and silver, platinum, uranium, and more, which should only take between 5 and 10 minutes, because I think that's a good window of length, just to keep viewers coming back, just to see what I have seen during the day, and it is not something that is taking an hour, let's say. So very short, very brief. That's my goal. And then I'm also starting to take one subject. For instance, 2 days ago I did platinum. I did an 8-minute video on platinum, which I think is very interesting to see. I think if you will subscribe and so on, I think you should check that one out, because I think it's a good roadmap for what I think platinum will do in this decade. So yeah.
That's good. So what are you seeing in the markets right now? I mean, obviously we're going to be looking at kind of what you do with your YouTube channel, lots of technical analysis, stuff like that. So what are some things that you're seeing today? Gold, silver, platinum, any of those? All my favorite.
Yeah, me too, man. I mean, gold and silver the last 2 weeks has been on fire, right? If just to say the least. So yeah, gold and silver right now is looking really good, and I think it's one of those moments for gold where it just feels right. I guess, the breakout just feels like it. This is the breakout of course you can be wrong, but sometimes you just have that gut feeling, and I think that this one could really be the one for gold. I really do believe so.
So you mean like breakout and just start running? Is that what you mean by the
Yeah, I think,
the one?
I think, nothing goes in a straight line, right? And we have some major resistance, from here to all-time highs. But I think, getting above the 2K level and just stay there for like 2 weeks or whatever would be really constructive, just to set a new base, just to reset all the overbought levels on the daily and so on. So if we can do that and just hover just right below, yeah, between the 2K and the all-time high, which is right here, I think that would be what I want to see. I don't want it to go straight up right now, because then we will probably get a hefty pullback. So I would rather wait, 2 weeks, 3 weeks, and then we will have a bigger base to jump from, I guess.
Is this sector the sector that you think looks the best out of all of the commodities, precious metals?
I think it's difficult to say, because I know often when gold starts to move, silver will lag. So silver looks really good right now as well, but it's still lagging behind a bit. It still needs to break out above some key levels. Same for platinum. So I think if we look at gold as the overall, let's say, market for the precious metals, if that performs well, then silver and platinum will join the ride as well. So, but yeah, gold right now looks the best. Silver, platinum is lagging a bit and still has this big breakout that needs to happen before it will join the party. So yeah.
Do you think we're just going to rip it this year?
It depends. I think I mean, a lot of people is talking about a somewhat of a big recession in the later half of this year. And I think if that were to happen and the markets gets pulled down a lot, then as good as I that if everyone sells off, then that will impact gold and silver and whatever. It doesn't matter what sector you're in. Um, so I guess depending on how hard this recession will be, if it happens, I don't know, of course, then it will pull gold and silver down. But gold and silver will be the quickest one afterwards to start to bottom out and then resume. So yeah.
Yeah, I think usually when the yield curve inverts and uninverts, that's generally when I think
Mhm.
gold, silver, they start to take off, and then you could have that recession pull it down a little bit, and then they take off
Yeah.
again.
Yeah,
So
sounds correct. And I think it's
I'm
about to
bullish.
uninvert right now, isn't it?
Yep.
Yeah, me
What
too. I really am. I think isn't it starting to uninvert or is it very close? I can't remember. I'm just gonna look here.
yeah, it was the 2 year yield it was coming down. I mean,
Oh,
it
it's
was
coming
up the
down.
past
Okay.
day, but um
Yeah,
yeah, it's starting to come back down
but
a
we
little
still have
bit.
some way to go. Yeah, yeah.
Yep.
But it is topping out for me when I'm looking at
Hmm.
it. So probably a rounding bottom like we had over here maybe, and then a collapse at some point.
Hmm.
But it should be coming down. So yeah.
Yep. I
So
agree.
yeah, gold looking awesome. It really looks good. It really does.
So then silver and platinum. Um, Silver's going to rocket right after gold. I know we've got the gold and silver ratio as well. So if gold's heading higher, silver generally lags and then gets kicked in the pants at 2x or something the rate of gold.
Yeah, exactly.
Do you
Yeah,
think that's going to
true.
continue? The silver moving on up and that ratio starting to kind of turn on over the gold and silver ratio?
Yeah, let's look at the gold and silver ratio. It's also something that I do a daily recap of this ratio because I think it's very important to look at it at least once a week. And I do it every day just to keep me updated. But you should look at this ratio at least once a week, in my opinion,
Mm-hmm.
because it's a very important ratio. So basically, what I have tried to sketch out here is this is the COVID high for gold, where you needed 126 ounces of silver to buy 1 ounce of gold. And what I think is that the bigger the move you get to the upside, the bigger the melt up also means the bigger the downfall usually, and vice versa. So what I think we're about to see right now is that to me this is the leg one down all the way down to 60, 62. Then we had leg number two, which is the top here at 96. And now we're about to roll over. And to me, what I'm finding important right now is this one here, this golden expanding bearish wedge all the way up here, which we tried to break once, and then we went in for the retest. As you know, often this is where it's defined if we roll over or if we come back into the wedge again or the flag or whatever formation you're looking at. And this time we went back into the wedge, to the expanding wedge, and came out to the red resistance here and rolled over. And if we go into the daily, what I was looking at when this happened was this minor head and shoulders, as you can see here.
Mm-hmm.
It's a daily head and shoulders for like, what is it, more or less 1 month. And the target was right down here, just below the golden trend line. So we actually broke below a bit. Actually, we overshot a bit and went back in for the retest of the neckline and rolled over again. So to me, this indicates that we are about to have a run for this major blue neckline here. As you can see, this is a half a year long head and shoulders, which I think will be formed here. We have again the left shoulder, the right shoulder, the head, and then the right shoulder over here.
Mm-hmm.
So I think we are on the road to go to the blue neckline. The trajectory, I don't know, but I think we will hit it, within two months or so. and then we will probably get some sort of a small retrace, and then I think we will roll over. That's my scenario. And yeah, then we can do the measured moves and so on. But basically, this means that when this ratio rolls over, as you know, that's very good for gold and silver, because that usually means that silver is outperforming gold, and that's exactly what we want to see in the precious metals bull market.
Yeah, I think that also signifies the market conditions. And for some reason, whenever that the 2 and 10-year yield roll over, gold and silver take off. So this is just more validation of that potential move that is coming. So
yeah,
this is a big one, because gold's going to be going higher and silver's going to be going higher faster. So where do you think this compression of the ratio is going to go to? How low do you think it could potentially go?
Yeah, I think actually the interesting thing about this ratio is how well defined this measured move actually is, in my view. So if this is the leg number 1, 2, then leg number 3 is usually, or it has to be larger than number 1. So I think at least for this, if you do the measure from the top to the bottom here, and then we take the high here, you can actually see that the 100% measured move from this formation is actually the more or less the 2011 lows, where the gold and silver peaked back what is it, 12 years ago.
That's at 30, a ratio of 30.
Yeah, that's a ratio of 30. Yes, that's true.
So you're talking about an outperformance of gold by over 2x.
Like two and a half. Yeah, I think for this leg down here. Yes, if this really gets going, I think that's a 2.5x for silver versus gold.
So what does that put silver, like a projection for the actual silver price? I mean, I know we're looking at this from a ratio. It's a 1 to 30, 1 ounce gold, 30 ounces of silver. But where do you think gold's going to go, or where do you think silver's going to go if we see this type of condition and compression of the ratio?
Yeah, I think it's always difficult to predict. But if I were to give you my thoughts and idea, I think if, of course, when we get down to this low here, I think gold will be somewhere in between 2.5 and 3,000. That's my guess. So during this year, it will get between that. I think in the higher end, more close to 3,000 than 2,000 and 500. So if we were to do some basic calculations, let's just say 3,000, because we are very optimistic and bullish. Then we can see it's 62. So that should actually put us at silver at 48. So remember this number 48. We can quickly go into the silver chart, and what that puts us to is, let's zoom out here, go to the log scale just to make it more visible for you guys. The 48 is roughly the all-time high. So when we get to that ratio, yeah, go ahead.
If you look at that chart from a yearly candlestick, because it's such a long-term chart, if you put it on the yearly, the 12-month, look at the breakout there and where those closings are on a yearly.
Yeah, I can. You mean this one from the top here down here, right, guys?
Yeah, but so if you look at the closings of the yearlies and you go a horizontal line, it's only at like 30, 31, $32.
Yeah, it is. Yeah, that is true. Yeah, that is true.
So, I mean, would that be considered a critical level, 31, 32 on a yearly closing? If we close a year out above 31, 32, or would you take the shorter time frame, like a weekly or a daily, and say that those are more? I would say you would weigh them more heavily to break through those. Like, what's your opinion on that?
I think the yearly bars of is nice to look at, but I think a lot can happen in a year. So I guess if you wait for this yearly, breakout and close above, I think you have missed the move by a lot. So to me, for a longer term, I'm always more or less looking at the weekly. That's my my sweet spot if I were to. So we can go to the weekly, I guess, and see if yeah. So the weekly will be, yeah, of course, near the all-time highs. But the weekly to me is it's not super early. It's not like the daily or the 8 hourly, but it is that early that you can actually start to get most of the move up, I guess. So the weekly to me is the most important. And as you can see, last week we had the breakout on the weekly for silver.
So what exactly
And we
does that
closed,
mean,
yeah.
the breakout, when you say we've got a breakout? Because I know we have a lot of viewers that we don't sit and watch, they don't sit and watch charts all day. So what does a breakout mean? What's your expectations kind of going forward for this breakout in silver?
Yeah, I mean, a breakout to me is basically if you have any given period where the price has been within some sort of range. It could be a horizontal range, or it could be a downsloping range, or anything. And basically what it is deciding in this range is which way do we want to go. In this case, we have what we call a bullish range because we have a move up and then a long phase where we just go downwards a bit within a range. So this is actually mostly bullish. And what you then look for when you say you have a breakout is that once you get the breakout, typically means that the congestion, or whatever you want to call it, phase here, where we have to see which way we're going to go, has determined that we are back in the uptrend again. And as I mentioned before on the gold to silver ratio, the most important thing to me is always the back test that we are going to get. Because when you have such a important and visible resistance here, you more or less all the time get the back test. And that's where you will see if this breakout is legit.
Okay.
So what we want to see is, of course, the breakout now, and then we will get some sort of retest. Will it be the high here? I don't know. Or will it be all the way down to 23.8? I don't know. But then we want to have the resume right up again. That's what we want to see if you are a bull. What you don't want to see, and which will be very bearish, is, of course, we break out, retest, and then we start to collapse again here. Because then we have a lot of people right here in this zone that have bought, which is now, underwater, right? So we will get a lot of selling. And this one you can see on the GDX, the gold and silver miners, you can see it 2 times where we have had the breakout and then we just retested and collapsed again. Maybe we can look at that later on, but we don't want to see that for sure.
Yeah, and one thing when we get a retest in silver, and I know I always buy the retest is what I usually call it.
Yeah.
Another thing that you can always look for is we can look for gold, look at gold and see what gold's doing. If gold's continuing to break higher and silver does a little retest, that's generally a really good sign.
Yeah, true.
So,
true.
Yep. So what else are you seeing? What about platinum? Because I mean,
we can
silver
check
looks
platinum,
fantastic.
Yep. Yeah, it does. It really does. And I think just back to the question, I don't think we quickly answered that, Andy. You talked about what will silver be when we get down to this low here.
Okay.
So as mentioned, this low was the all-time high at around 50. And if you do the measured move on a nominal scale for this big cup and handle that we can see on gold and silver, basically means that that target will be at 100. So I think once we get down here in like 3 years' time, I think silver will be at 100, and you can do you can multiply that for gold, and it actually says that gold will still be at 3,000 if that is the case. But I think silver will at least be at 100 down here. So,
what about doing silver calculations on logarithmic? You get
I love that
very
one. Yeah, I
different
like
answers.
it. Yeah,
On
exactly,
the cup and
exactly.
handle.
Yeah, true. That's also why I said the nominal measured move. And I totally agree, because when you're looking at a time frame, this is 50 years we're looking at. Usually, when you look at this long time frame, you want to go to the log scale. because a lot has happened, and the higher you get, yeah, you can look at that right here, right? If you look at this and we zoom out, it looks this down here looks like nothing compared to what we have seen here because we have the two spikes. So if you go to the log scale, to me, whoops, I just messed it up here. To me, makes a lot more sense when looking at such a long time frame. But I do agree. So let's do the measured move. So just for the record, this is the big cup, right? And now we have the handle here. And typically you want to measure the bottom here of the cup to the top. And if we were to do a nominal measured move, we should take this one, which is 46. So we can do a 46 move here, which is roughly around that area. So just below 100. But since we are on the log scale, we should more often use the percentage move, which sounds ridiculous, I know, but let's do the measured move. Let's just clip it right there. Right, so we get this roughly $700 silver if this were to play out to the full. If we get this full bullish precious metal bull market that we hope to do, then this could actually be a target. And yeah, I know it sounds insane. It sounds insane right now, but you can just look back to the 70s, right? And what happened there. I mean, it's not, you can see here, once we broke out from this formation here, we did get a $600 move, yeah? So yeah.
Do it. I say we do it.
Let's do it.
I think silver should definitely go to $700.
Yeah, that would be amazing.
Yeah, and I always hear people, they're like, you don't want to live in the world of $700 silver. I'm like, the money's already created. It just needs to rotate over. It's already there.
True.
It just needs to rotate.
And I hear that all the time as well. Sorry. Yeah, I hear that all the time as well. And if you go to gold, let's just look at gold, right? Same here, log scale. Just look at gold, what it did from 2000, from the start of 2000 to the end of 2011. Gold did a 700% move. And according to my knowledge, the world didn't go under. So, I mean, it's just money rotating in and out, and monetary, what's it called? Yeah, it's getting reset because of all this money that we have in the system. Yep. And it has happened many times before. So I think, again, people are talking about, gold will do nothing. But I think gold, once we get this precious bull market over in within 10 years, let's say, I think gold will be 5 to 10K easily. That wouldn't surprise me at all. So yeah.
And people, if it's a 10 grand and you do a 10,000 divided by 30 because of the ratio on silver, then you're way up there.
Yeah, it makes sense, right? Let's do it just for the visuals. So yeah, that's a 300 and something, yeah. So that makes sense.
You're way up there.
But then again, this leg down to the 30 in the gold to silver ratio, to me is still the leg number 3. Then we get the pullback, leg number 4, and then we get the utter collapse down to what I think, I know it sounds crazy, but we could see single digit gold and silver ratio when this whole thing is over. And then you can, you can do the math yourself, but that's where I think we're going.
So you're talking $1,000 silver, maybe.
I mean, yeah, it sounds silly, I know, but right now the measured moves, if you look at the gold to silver ratio, could point to that. So I'm just trying to tell what the charts to me is saying.
Right.
So yeah. So you can see here we have the 100 server. This is my bad. So yeah, as you can actually see how well it aligns up, right? Just look at it, right? This is the measured moves from this one here. Let me just remove all this clutter that I have. Blah, 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 blah. Just get rid of all that good stuff. Goodbye. Okay. You can just see how well it lines up, right? The 1.618 Fibonacci is the low 2011. Then you have the next one. The major one is 2.618, which is the lows back in the 80s. So you can just see how well all this is lined up. And to me, that's just, it makes sense, right? Because it's almost to perfection. So yeah. And if this were to happen, then if you invested into gold and silver, then you will have a very good time, to say the least. A very, very good time.
You're talking like party on boats and stuff, right?
Yeah, depending on how much you have. But I mean,
Yeah.
it will also be a period where inflation will be very high. So yes, you will earn a lot. You will outperform the inflation,
Mhm.
but man, prices will go up on food, whatever you want. Yeah, everything will be very expensive. So yeah,
Is that the environment that you think is coming?
yeah, it is.
Highly
I totally
inflationary?
believe that.
Hmm.
High inflation, yeah. And if you go to the 10-year 10-year what's it called, the rates, yeah, the US
Interest
10-year.
rates?
I can just quickly. Yeah, true.
Mhm.
Thank you. I have it somewhere, don't I?
I think you had it up there. I saw it.
Is it here? Oh, I'm blind. Yeah, there it is. You can just go to back to the maybe we could take the 30-year. That makes more sense. Yeah, let's take the 30-year. And I know we have talked about this one before, and you have seen it before as well. This is just
Mhm.
I'm just doing a rough sketch here. So this is a 40-year bull market in bonds, which which broke during the COVID madness. As you can see here, we had the final capitulation. We can just go to the log scale just to see how massive this big final blow off top to the downside was. And as mentioned before, the bigger the blow off you get to one side, the bigger the move in the other side.
Mhm.
So so this to me tells me that for the next at least the next decade and yeah, and even probably way longer, we will see high rates. This 2% rates that we have been used to for the last 20 years, you can just, yeah, that will not happen. Not on average, at least. So,
What do you think the driver of those increasing interest rates are going to be? Just curious.
sorry,
If you have any opinions around
what,
it.
what
I
did you say,
said
Andy? I didn't hear.
I said, what do you think the driver of increasing interest rates is going to be? I know it's easy to say inflation, but what do you think is going to be driving that inflation? Is it like an end of a credit cycle? Is it scarcity of commodities, a combination of multiple things? Like what are your opinions around that? And, or you could just say, I don't know. The charts are telling us that we've got a big paradigm shift change.
Yeah. And that's good that you mentioned it because often I purely look at the charts just to say,
Mhm.
what are they telling me? And to me, it's telling me that we have, as you mentioned, a paradigm shift um, in the rates. But I do think it's mostly, as mentioned, during this COVID low, we had almost 0% interest rates. And I mean, how low can you go before you break down something? And clearly, this is what happened here. So I just think that this is change where also you can see here this upper golden trend line is more or less the pain, let's say, threshold where you have rates compared to debt and how the system is sustainable. And right now we have clearly broken out. So to me, this old bond system that we have had in place for 40 years is broken. So I think mixed with this and mixed with, we haven't invested into commodities for like 20 years or so, even more. So I think these two factors will drive inflation up um, in a combination of those two. And especially energy. I mean, we have invested like I just saw a post on Twitter that we have invested $6 trillion into solar for the past, I can't remember, 10 years or so. And if we were to buy nuclear power plants for that, we could have had, I think, 600 or 700 major power plants all over the world. And we would have almost no energy issues. So I think we have made a lot of bad investments into energy, which we will pay for, in my view.
Yeah, we just need to wipe those wind turbines and solar out, get some good stuff that actually works in. And then we will
Yeah,
thrive as human
I think solar
beings.
and wind. Yeah, yeah. I think solar and wind makes sense to some degree in some areas. I think it is
Mhm.
okay, but I think right now in Denmark they want to put up these massive, solar farms all over the place. But we have to remember in Denmark, 50% of the year it's dark, so that doesn't work. And when it slides on, during the summertime, we have a cloudy and rainy weather almost always. So that's another 50% gone. So if we are lucky, we have 25% of the amount of time where it can produce that we will just pray that it works right. So to me, it's very unsustainable. And also most of the time where we want to use the electricity is during the evening where it cannot produce. So to me, it doesn't make sense to me to do it in Denmark and Norway, Sweden, and so on. But maybe, in what is like California, Spain, Europe, it makes sense to some degree. But but definitely not, in Denmark. It makes no sense at all to me.
What about gold and silver mining companies? What's your opinions around those? You think they're finally going to take off? I mean, they've been in the hurt
They have had,
for like 40 years.
yeah,
So,
man, they really have. They really have. It's a good transition actually, because we talked about this false breakout that we talked about on the what was it? Was it silver? I think it was silver.
mhm.
And this is the perfect example here, right? We have let's just put it somewhere around here. It doesn't matter anyways. Yeah. We had the breakout here, and then we went in for a major retest and we failed, as you can see. Then came back up again to the golden trend line, the upper golden trend line, and rolled over. So this is what we don't want to see on silver, because that would mean that we often get a very big flush down before we can go back up again. But yeah, as you can see here, this is only, what is it, 15 years. I mean, gold and silver miners has been hurt big time, especially in the past year, because gold actually did hold okay, but the cost of doing business with oil, gas, getting stuff to the mines, metals, and so on, spare parts, those prices has just went through the roof. So what if gold just stayed stable in 2022, but the cost of doing operation just let's say went up like 50%, that's a pretty big what's it called, earnings cut, to what they earn. So that's why I think the gold miners has done so bad for at least the past year. So
I think we're looking good because we do have a higher
yeah,
we have a higher high just recently if you
yeah,
look.
exactly. Yeah.
So that's looking
Yeah,
really good.
we have, yeah.
Mm-hmm.
Yeah.
And if you look at where the price is
So
today
yeah,
too, and
yeah.
you look to the left, we're kind of
Hmm.
above a bunch of different selling pressure from before, the years before. We're kind of above all that. Yeah.
Yeah.
We had that big basing
Yeah,
kind
we
of
are.
pattern. So
Yes, true, true. And I think, as you can see here, we had this big basing, and then we blow off here, and then we came back to do a lot of retests. And I think this dip below here is basically the 2022 um, very high interest rates, high cost of doing business, and gold just stayed stable.
mhm.
This is the dip we had here, and now we're back above again. So I totally agree that that it does look better. And I think, again, if gold goes to 3,000, I mean, that would be 50% on gold. But if that happens, gold and silver miners will do way better. I mean, way better. So yeah.
We just got to rip. We
And
got to
again,
rip through that line. Yep.
yeah, this is the line. Yeah, exactly. This is the line to go through. And and yeah, if you can get above, stay there, get it again, make a good base, then I think that would be a perfect buying opportunity for people who wants to invest into miners, for sure.
Mhm.
But I
What
may say
about?
that miners is a very
Mhm.
it's a business where your psyche will get tested a lot during periods. So you need to be mentally capable of having 50, 60% pullbacks on the way. So
What about the XAU to gold ratio or GDX to gold ratio or whichever ratio you prefer?
yeah,
What does that look like? Because usually when the gold and silver mining companies are outperforming the commodity itself, then yeah, it's game on. That's for sure, in my
yeah, it
opinion.
is. Yeah, it truly is. And yeah, this is the GDXJ, the juniors, because I think the chart compared to the GDX versus gold it just makes a bit more sense to me. But this is basically the highs back from 2011. And may I remind you, the gold is at the same price as it is now compared to then. Just look at the discount right now. It's just it's mind-boggling to me. We're talking about a 500% discount right now compared to then. I know, prices has gone up on various things and so on, but still, it's just, again, it's a major opportunity to do some multi-baggers if you want to invest into these things. And I think, this red one here, you have the tops going across here, all the way down here. I think this is the ultimate go line for me. But then again, I think if you want to be a bit early, I think once you get the breakout of this formation right here, the expanding channel right down here, and get above 0.022, let's say, I think you can start to buy. I think that's a very valid place to start buying when we get up into this zone here.
What if you were buying in October of 2022, that bottom there? I mean, wouldn't that be a better entry point than, say, some of the other stuff? I know the technical analysis guys, they like seeing breakouts. They like the breakouts, buy the breakout, whatever. I mean, I look at this ratio chart. It is so low that, I mean, why not get aggressive now? Why wait till the breakout? Just curious.
Yeah, I mean, if it is truly correct that you should buy, when you get to the lower end of this formation right here, meaning the bottom back in October. But right now we are, I wouldn't say no man's land because the structure looks very good. But to me, if you didn't buy here, then again, it does make sense to buy. We have had like 5 weeks of green. So to me, if I want to buy, I will typically more or less always do it, let's say, counter trend on the lower time frame compared to the overall trend. So yeah, but then that's just me. I mean, if you're looking for like 10-year period where you want to be a long-term investor, buying here, it can never hurt. But I'm trying to be a bit more clinical with my purchases. So yeah, that's just me, of course.
So like, let's take a individual company like Wheaton Precious Metals, WPM. And I know that one's a bigger royalty company. And that thing, I mean, to me, that looks really good. We've broken out. We've got a nice big cup and handle pattern, flag pattern, whichever you want to say.
Yeah. Yeah, but then again, to me, I know it's we can go to the daily. And this is a big move, right? This is a massive move on a short term, like 30%.
Right.
And I don't use the overbought and oversold as much, but I just have it just to so I can look at it quickly to see. And we are way overbought, sorry, for this move up here. So to me, again, if you want to enter, I would wait for a possible, let's say, counter trend move, which could be a flag, just to name one thing. That's just how I usually buy into these things. And it could be, some sort of back test here, or just staying here for some period and then we rocket higher. But to me, on the shorter term, buying here, it's not a bad thing, but I have just seen many people buy here only to roll over, and then they will sell their shares because, oh, I lost, let's say 10%. Let's say it goes down 50% for this move here, and then they sell, and that's usually where it starts to turn up again. So yeah, that's just my preference, not to buying into a move that has been this strong for so long. It's not what I do. So yeah.
Right.
But yeah, it looks good overall. You can see it here. A lot of false breakdown here. It looks amazing, no doubt about it. It really does.
What about any other sectors that you follow? What are you seeing in those, like uranium or something like that? Because I know you follow uranium quite closely.
Yeah, I do. But should we take platinum first? I think
just
to keep it within gold and silver, precious metals.
Let's go for platinum. Yeah.
I think I think platinum is a very good place to be as well. Let's just go into the other one that goes a bit further back. Platinum. It's right here. Oh, yes. And this was also something that I did a video on my YouTube last day. I tried to give a 50-year roadmap on platinum, and I think it looks insanely good. And I know a lot of people don't even know what platinum is. So this is the 50-year time frame of platinum. And the reason why I started to get into to platinum as well, because I usually got into gold and silver. I didn't even look at platinum until I started to look at, the ratios between gold and silver and the platinum chart, which actually looks uh, way better. I mean, platinum could do way better than gold for this move up for this precious metals bull run. So what I want to show you is that, as you can see here, we had this big move up back in the 70s, and we have had this big move up here from at the start of the century. So, and what I want to show your viewers is, if we were to draw a line from here down to this grinding zone here, and then all the way down, we can do the same up again, up from here, just like that. Let's go to the weekly because it makes more sense like that. And then what I see for platinum is that we had this peak here, went down to make a bottom, and then we went into this grind. This actually, it's a very, very big bullish formation, this one, but it broke down. We curled over, and then we again went into the squeeze here. And we can actually draw similar things. As you can see here, we have the bottom, the squeeze here, which actually looks very bullish to some degree. We broke down, did this rollover again. Yes, we had the COVID madness here, but that's a blip in the in the matrix, I guess. And again, we are just squeezing here. So these formations, right? That's a very bad arrow. Sorry. This one right here and this one right here, to me, looks insanely similar. And the fractals going back it's not 100% because we have double bottom, I know, but it's very similar. So to me, what I'm looking at right now is that if this were to repeat, right, this move up here, from here, then we have a massive move ahead of us in platinum. And there is two ways we can measure the move. Oh, I just removed way too much, but anyways, doesn't matter. Like this, and then like this. Two ways we can take the breakout move here, which is roughly 500%, which if we do the same here, gives us, where is it? It's up here somewhere. Let's call it 6,000.
We better get up there.
More or less. Yeah. and I think we will. Let me show you one more thing before I answer that question. And then another way to do it is if you have this, if you take the parallel channel from the tops here, and then we go all the way down, you can see how well it fits, right? We have the highs, then we have all the lows down here, more or less lining up, and then the high here again. So if we were to do this would be my, what's it called? Worst case scenario in this bull market, because I think it will go higher, which will be then somewhere around 3K, more or less. The top of this long channel here, so 3K more or less, which will be my lowest estimate where we will go for platinum.
What if we take the size of the channel and project the size of the channel on top of the current channel?
Oh, you mean
that,
okay.
In logarithmic, of course, because we always need it to be a ridiculously awesome number. But
exactly. I like the idea.
Yeah, take the 500% move and then put it on top of the channel and see where that goes.
Oh, okay, so if you were to,
yes. Yep, just like that.
Okay.
But 20,000 or so.
Yeah, but then again, I mean, the average platinum to gold ratio is 2. And if we're talking 10K gold, which we did like 20 minutes before, I mean, why not? It sounds ridiculous, as I said many times, but yeah, it is possible. It's all about ratios, and how they connect together. So, So,
and how people get scared in the system and all of that stuff, the market conditions of Because the people all run at this, I don't know. I mean, we saw a ratio in Weimar, Germany of 5.5 times the price of gold.
Yeah, true,
Platinum.
true.
I mean, imagine if gold goes to 10 or 20,000 to do, that's platinum at 100 grand. If
Yeah,
it's five
it
times
is.
20. I'm not saying that's going to happen,
Yeah,
but who knows?
it happened before, so I guess. I
Right.
mean,
It's happened before.
so so it's not but yeah, and also remember, platinum, the platinum sector is just so tiny. I don't know the numbers, but if you can probably Google it somewhere, and it is just ridiculously low. I mean, you have shitty companies that are worth 10 times more than the entire platinum sector, and they produce nothing, right?
I know.
And we have platinum, which is a very, very important metal for our future, clean energy and so on. So, I mean, if we get a scarcity in platinum, I mean, that could rip some faces off for sure. That's for sure. 20K, maybe, maybe not, but it will perform insanely good. That's no doubt from my view.
It'll also perform very well in an inflationary period, at least as we've seen
Yeah, sure.
historically. So, what else?
Yeah,
What
it
else do
is.
you want to talk about, Kasper? What else you
My favorite, uranium,
Yep,
even though it has performed
uranium.
not so good the past what is it, 18 months or so. It hasn't been the best. But yeah, let's see. This is URNM. We can also
Mhm.
take the URA, but I think the URNM is purely uranium. So I only have two trend lines on this one, and this is this formation right here. And I will say this, and I also know the market sniper has mentioned, a big drop in uranium and oil, gas. I don't know if he mentioned gas, but anyways, doesn't matter. And what
Gas
he's
already
looking
fell.
at is, yeah, yeah. I
Yeah.
mean, I actually have a ratio regarding uranium and gas we can look at
Mhm.
afterwards. But let's just take this one. The big, shoulder, head, shoulder right here. And yes, it's visible to anyone, so we shouldn't rule it out. So so um so yeah, this one could definitely play out. And let's make it blue because all my necklines are blue. This is the neckline, and will it happen? Maybe. Um,
Mhm.
but also you also have to see that this is also, yes, it looks bullish and bearish in two different ways because you also have the pin and squeeze. So it's uh it's very tricky right now. And as you can see right now, we are at the lower end of or we're close to the neckline. So it could break down, but it could also resume up here because I think I also made a tweet about this one because every time, you know, let me just quickly draw something for you guys here. I think you've seen this one before, Andy. So every
Mhm.
time we have broken this trend line here, we have resumed up. And right now, what we are doing is more or less a back test of that neck of this started trend line going down here, similar to what we saw here and what we saw over here. So hopefully, this is the low for the retest. And as you can see, it's a very bullish candlestick. So what we want to see, are they open tomorrow? I guess yeah, they are, isn't it? Yeah, tomorrow,
No,
right? The
tomorrow's
market's
Sunday,
open. No?
Monday.
Oh, sorry.
Yeah,
Monday,
yeah,
yeah, my bad. Yeah.
Monday.
Yeah, true,
Tuesday
true.
or Saturday right now.
So uh, thank you. So what we want to see the next trading day, we want to see we start to curl up here for sure. We have to wait and see.
Lots of
But again,
conflicting
yeah,
opinions going on in
yeah,
oil and uranium right now.
yeah. And I see
What?
why, because no one, like,
Mhm.
if you went back 2 years, everyone was talking about uranium. That was just all over. And right now, it's just dead silent. I can make the most beautiful chart of a stock, and people just don't comment or like it. So I think we are at the total reverse of that spectrum.
Mhm.
So yeah.
Yeah, how do you handle the differences in opinions going on here? What how do you view this? Do you just don't care and just ride on, or what? Like, what's your take on it?
I have I follow a decent amount of people on Twitter you also, and if I see something maybe from you or from Francis or whatever, I take it in and just try to see if what you are saying or other guys are saying, does that make sense to me? So I try to what's it called, confirm it to myself, does this make sense or not? And sometimes, it just it makes perfect sense. I agree. But then again, often I just do my own analysis and say, nope, I don't believe this is to be the case. So so yeah, I think that you should do that for anything in life. Anything you hear, any opinions, whatever, just agree that you have heard them and you acknowledge it, but then also confirm it. Okay, every time. And if you confirm what they say, fine, that's what you believe in.
So when looking at this chart here, since we've got conflicting kind of data on different time frames and stuff like that, what's your take on this? Like where do you think it's going to go? And I know it doesn't matter where I think or where
Yeah,
you think it necessarily goes. It's going to go wherever it's going to go. You think we're going higher? Do you think we're going lower? And what's your reasonings behind it?
I think right here, very short term, it's difficult to say if we are to get a drop down, but I think long term, I think we haven't solved anything regarding to energy when it comes to oil, gas, or uranium. So I think for this decade, I think when this decade is over, we have had been at a lot higher levels than we are right now. And yes, we can get, a breakdown here down to maybe this lower goal, this trend line right here for a third touch. And as you know, the third touch is usually the last one, and then we can rocket higher. I don't know, but my thesis is uranium. To me, as I have said, whenever I started to go into uranium, which is around here at the just before late 2020, and that is that I will not sell any shares before we hit at least triple digit in the uranium spot price. So that's to me that's my game plan for uranium basically. So yeah.
Yeah, I'm riding it. I've got a good chunk in it. So I'm just riding and riding and riding. A lot
Yeah.
of people say they know that this is just going to fall. That's what they say. And I
Yeah,
just look
exactly.
at them and say, if you're wrong, you are not going to get an entry point. You'll be done if
Yeah.
this thing were to rip higher. Which, it's really difficult for me because I can see the interest rates are starting to drop down. The yield curve is uninverting, which is generally not a great time for energy in general. But they're already putting stuff to the balance sheet right now. They're already expanding, money in the system. And it's like, man, they are making this really difficult because generally when everything kind of collapses, it's on the housing market that just credit gets destroyed
Mm.
and deleveraging event,
Yeah.
like 2008 timeframe. But I just don't see that happening now. So man, it is a really difficult situation in the short term to try to time this because, in all honesty, I don't know which direction this is going to go in the short term. I don't think anyone knows
No,
that.
no, no, me neither. Me neither.
I mean, we can get out
No, I agree. So
all these different charts, and I don't think it's clear enough to say that we're going in one direction versus the other. So then you start
nope.
stacking up data and you start looking at, what are yields doing? What are the yield curve, inverting and uninverting? How is it moving? And we're trying to draw conclusions from the data in aggregate. So it's hard. And in the middle of the bull market, gold and uranium and oil all run together. And we're also in the middle of a
Yeah.
commodity bull market. So it
Yeah,
becomes
true.
really
It is.
difficult in the middle of this market. What's your opinions?
Yeah.
Mm-hmm.
Yeah. I mean, it is really difficult. That's also why you need to, as you also do, looking at a lot of ratios just to see if it still makes sense. So looking only at the commodity itself is often very good, but you also need to collect more data. And one data point for me is still this is the URA divided by the spot price. And what you
Mm-hmm.
can see here is actually that all the uranium miners right now is has the same price when you measure against spot price compared to when the bull market started. And to me, this line is holding up very well still. Hopefully it will. But to me, this looks like it could be, hopefully, this is the basing point in time in this ratio, and then we go higher. So, but yeah, again, it's very difficult to say right now because I don't think we have had such turbulent times in like, I don't know how many years. So it's
Yeah,
difficult.
and it's if the ratio's cheap, generally speaking, I mean, I know it can obviously get cheaper, but if you're buying when
Yeah,
it's really, really cheap and you just hold on and wait a really long time, generally it works out pretty well for me at least, especially if you're using
yeah, I
like
agree.
physical metals. So I would assume, you know, like platinum, that's probably going to be a really good play because platinum can't go bankrupt. A company can, obviously, but yeah, it's usually worked out pretty well for me if I kind of buy and just hold on, kind of cost average in when the
Yeah,
ratios suggest to. So
yeah, and remember, most people buy when it's very expensive, and in the last 20% of every move, the retail guys do that. So
mhm.
so doing the opposite, buying when it could drop, yes, let's say call it 20 or 30% more, fine, it can drop, but still you're buying very cheap. So, and if you have a plan and a thesis, then buying cheap, according to your analysis, is often way better than buying whenever everyone is buying Tesla or whatever. So yeah, I agree. I totally agree.
Yep. Is there anything else you'd like to share? Or
No, I think we
pretty
had a
good,
good
good session.
roundabout tour. Yeah, exactly. So I think so. Yeah, my money is placed in precious metals and energy, roughly,
Mhm.
like 80% of my investments, and then I have different things. But yeah, that's what I believe in for this decade, and that I have been saying ever since we started ever since the COVID madness. I think I said that yeah, energy, gold and silver is where to be. So yeah,
Okay, well, that's good. Well, thanks for coming on, Kasper. Really appreciate it. And again, if somebody wants to reach out to you, how do they get a hold of you? And what's your YouTube
yes,
channel one last time?
yeah. I could just quickly. My Twitter
Yep.
channel is uselinkinv. Please subscribe to me. I do charts every day, and uh, and hopefully you can benefit from it. Yeah, and my YouTube is the same, uselinkinv.
Mhm.
I try to post daily, and I take requests and so on. If you have a sector that we need to look at, I will happily do a 5 or 10 minute video on something that I think is relevant. So please like and subscribe, and hopefully we can get you on at some point.
Sure, definitely. Love to come
Sounds
on.
good. Sounds good. Yeah, sounds good.
All right. Well, that's all I've got. Thanks for coming on. If you guys made it to the
Yeah, my
end,
pleasure.
say thanks, Kasper. Put it in the comment section, and that's all we got. So we'll catch you later.